Well, thank you very much, ladies and gentlemen. I didn't know if I should skip or dance coming up here with that music, but I did want to say, Robert, that was a really great talk, thank you. And it astounds me the challenges that you've been through in Mongolia, and relatively speaking, Fortescue, it's very simple, it's very basic, you know, from technology to open pits to sovereign risk. This is a basic company. In fact, many people, I think, in this audience here could easily have done what I've done with, presented with the same opportunity. But I've only got, my big challenge here is I've got about 30 minutes of your precious time. Either fall asleep, because we're going to rapidly run through a whole heap of information, or stay with me. It's entirely your call, or indeed you can do both. But let me just get rolling here. I want to talk to you economically first, about the incredible time we're living through. Your grandkids are going to look back at you and say, Grandmum, Granddad, you were there. You were there when these waves were shaking the world. You were there when telecommunications just took off, when regime changed without bullets, when the economies of vast countries grew without precedent, where you're simply lucky to be alive. And here we have these waves shaking the world. China, India, the third wave I'm going to refer to, the crabs. China, Russia, Australia, Brazil, South Africa, the resource economies which are growing rapidly. The wealth which is being achieved here is massive, but it will not be without serious repercussions. Food will be an issue, where regimes cannot keep the protein levels to their rising economic value populations. There will be uprisings. There will be political instability. And you've got this massive change, which I referred to earlier, internet communications, mobile phones, the ability to do everything at once. I've just seen the growth in my own company since we adopted the BlackBerry. It's quite incredible in 2004, 2003. It took off. I know that's happening in my company. It's happening in entire economies. It's leading to this massive change we're seeing. And the impact of these digital communications, you've got now hundreds of millions of people prepared to run their whole telephone systems without any hardwiring, not hooked back to a power supply, not hooked back to a telephone line. That's creating economic freedom and communication from economic freedom of a precedented scale the world has never seen. I just want to talk to you also about something quite close to my heart. You've seen this massive growth in the iron ore industry, this massive growth in the steel industry. You see formal government policy in China shifting its steel industry from its hinterlands to its coast. Never judge words of a politician, one might say, but judge their actions. When you see these steel mill policy being shifted to the coast, you know the country's readying itself and beginning to trust the marketplace for seaborne iron ore. I believe intrinsically that part of that trust in the supply of seaborne iron ore comes from the Fortescue Metals Group and its ability to remain independent. So where are we in this economic cycle? Let's just have a quick look at it. Predictions for growth. We've got these big independent economies underpinned by resources. We're growing around 4% a year. That'll continue to happen, around 440 million people. Then you've got the third wave I speak of. Southeast Asian economies around 6%, and then the crabs. China, Russia, Australia, Brazil, South Africa, and the third wave coming up under India, coming up under China, is a new reality for us all. I can remember starkly reading a report by a global research house to a particular three-letter company. The question was, is China real? The same could be said about India. The answer came back to that board of directors, and they voted with their feet, was no. This is just another hiccup, another false dawn. Don't get excited. Keep sending your ships to Europe, keep sending your ships to Japan. Of course, Fortescue didn't do that. We entirely put our mast on the China ship. And just to show you, this is 2003, 2004 archival material when we started this company, how passionately we believed in this future. That I gave a talk which had this video in it, and it just shows you from our own archives how much we believed and we were prepared to risk our whole company upon what was going to happen, not in the next 7 or 8 years till today, but in the next 20 to 25 years. That's where we're standing. Let me show it to you. Now, we consider we had as much courage as that surfboard rider. Perhaps not. Looking at China, growth around 8%. Growth is a political imperative in this country. It's a necessity. It's what you stake your leadership life on. We shouldn't be surprised that it's 1.3 billion people is making the enormous waves which Napoleon referred to when he said, "Let China sleep, for when she wakes she will shake the world." And of course India, let's not underestimate India. Anyone who travels through India, on the ground, not on an aircraft, but you go through on the ground, you see this enormous poverty, you see this mayhem, you see this unbelievable lack of organisation, and you look around and you see corruption in decision making. Yet, believe me, democracy is a powerful weapon. Yes, it's being held back, but as the communications I spoke of earlier really take a grip in this country, and as their population sees what is possible, and they ask that question, why have all the people in the Mines and Money Conference, 23rd of March in Hong Kong, got all of that, and why haven't I? And really there is no answer for them apart from what stands between you and us is your hard work now. The potential is yours. China's proven that. And world economic growth. We've seen the hiccups of New Zealand, Queensland floods, the massive Japanese earthquake and floods which Robert referred to. These are tragedies, but in economic terms will not falter the scale of that economic wave I referred to earlier. So world GDP around 5% for India, 1.1 billion people. So that's that political imperative I spoke of. China's 12th five-year plan, going strong, fantastic for commodities, fantastic for steel. That economic growth is set to continue from strength to strength. And as I say, I would put my faith not in the report in 2003-2004 I spoke of, which the three-letter company rode their board policies on, but on not the analysts, much as we love them at Fortescue, but on what China says. We believe in what China says. China's got this uncanny habit, which we stand on as part of the culture of Fortescue, of doing what it says it's going to do. So we just, old-fashioned as it may seem, trust China. China says it's going to do X and Y. We believe them, we build a project and we build a company around them, and we look to India, the third wave and the crabs, for long-term economic growth. So fueling that growth of China in particular, we engaged with China in 2003 to 2005 with our very earliest contracts. We targeted steel mills without long-term supply arrangements. You had this historical dichotomy that Bow Steel was able to peg us all to benchmark prices and then promptly flip those tonnes over to the market prices at a massive profit, yet still argue the market should not prevail here. You must accept benchmark pricing and we will take the profit from the market. Now, of course, that led to a significant economic distortion. If you don't let the market do what it's best at, which is determine supply and demand, then you will have a severe correction sometime, and we're seeing it now. And you'll see iron ore prices squeezed a little, at least till the end of next year, as the market seeks to correct, as the Fortescue scramble to build another 115 million tonnes where we are now in 2 years. So that is, of course, the reality. There will be dozens and dozens of cities like this. China has a policy to build up to 20 small and medium-sized cities a year. Robert spoke of the massive increase in railway lines, 60,000 kilometres. He spoke of the migration of people just for the festivals, greater than the world has ever seen anywhere. And we're seeing history unfold, and I bring you back to looking back at this conference, looking back on your time and having lived through this, and we're truly lucky to be part of this. So let's just have a look at the outlook for the steel industry. There is the growth in steel. There is, of course, the supply. We are seeing steel capacity growth as predicted by China. Let's get old-fashioned again. Let's trust China. China's saying they're going from 790 million tonnes to around 1,290 million tonnes in 2015. Well, that's cool. That is a seriously big increase in tonnes. We're talking 500 million tonnes of steel capacity. Now, look, Macquarie quickly says, well, hang on, steel capacity is not steel consumption. That's all cool. But they're not building it for fun. Steel mills make iron ore companies look cheap. They cost a fortune to build. This massive investment is going into that steel industry for a serious reason. And if, say, they were building it for a reason, if, say, the analyst did, as Robert said, get it wrong on the demand side, then let's just look at the equation. What does it mean for iron ore? 500 million tonnes of steel capacity, people say, well, that's like 700 to 800 million tonnes of new iron ore. And that's taking into account, say, Brazilian high-grade fines, which actually not a lot of people want because it tends to smother blast furnaces, so they pelletise it. That becomes expensive. So China looks to the Pilbara. And when it looks to the Pilbara, it's looking at very low cost all up. It's looking at very high value in use. It's got that massive shipping advantage, and the fact that, particularly at Fortescue, our fines sinter rapidly from iron ore to metallic iron. Your volumetric increase in your blast furnace just from taking Fortescue fines gives you a bonus in your pay packet at the end of each month. That has a mesmerising effect on steel industry managers because you've increased the capacity of your blast furnace because you've procured wisely. Now, the trouble in paradise is that the Pilbara's grade isn't as high as Vale's. It's sitting around 60% exported. And it's wet. So you've got to bring it back again. You run those calculations, that 500 million tonnes of steel capacity would require 900 million tonnes of iron ore, seaborne iron ore supply, more than we currently have. This is a massive shift, and it's in front of us, and it's why I say, ladies and gentlemen, we're so lucky to be living through this time now. Chinese domestic production. There's the demand curve. That's real Chinese consumption, and this is real Chinese supply. Those mines are getting deeper. They're not particularly safe, nor environmentally friendly. And both these things are very, very important to China. They're developing and setting an example to the rest of the world in many areas for environment and safety. Now, they don't have it across the country, but are they aiming for it? Absolutely. Absolutely. Is there policy to build their steel industries around their coastline? Absolutely. Does this mean that they're now going to trust the market? Absolutely. Does this mean seaborne iron ore is a fantastic place to be? Absolutely. Does this mean if you're tucked under the nose of China in the Pilbara, are you in the best place you can be? Absolutely. Finally, I say to you, This is a simple company. It's a simple project. Many of you in this audience could have done it with the same opportunity we had at Fortescue. But I just want to walk you through a couple of other things. This is Chinese domestic iron ore cash costs rising rapidly. We need the higher iron ore prices to set this market, to bring on the supply. It's not an accident now. We are looking at market iron ore prices, not a falsely orchestrated, berated, beaten up iron ore industry or steel industry in these hostile meetings we used to have annually. I'm sure many of you can remember them, to set the benchmark iron ore price. Now it's being set by the market, so the market will encourage the supply. And it certainly encourages a strong iron ore price and certainly encourages its Fortescue. So let's just have a quick look at iron ore prices. While I'm not going to predict them, but I can say the relatively high cost of China's domestic iron ore production will lend weight to the fact that if they're to increase, they need that higher iron ore price. That pricing transition I spoke of will drive an increase in supply. And the key risk factors facing us and the strategies to overcome them is essentially lack of supply. We've got skill shortages. We have, in Australia in particular, we have uncertain taxation policies with carbon tax, mineral sources rent tax. You have BHP seeming to design taxes for the federal government, which everyone else but BHP will pay. You know, this is an unstable environment. This is not good news for China. China needs a really stable environment, needs a federal government which doesn't have tax policy designed by multinationals for other people to pay. It needs that free market to work and work beautifully. It's not great for Australia, but I'd argue it's worse for China. So the mitigation of that is automation, remote control, expanding extremely rapidly and continuing to influence those taxation outcomes. The big supply steps will be Brazil, up around 240 million tonnes, Australia up around 250 million tonnes as well, India around 20 million tonnes increase, but you have a steel lobby group much stronger than an iron ore lobby group in India. And they're seeing the writing on the wall. They're seeing the massive exports which they are making to China. And they're wondering what is the difference between them and China in a few years, who are now massively importing iron ore. And they're seeing very little difference. And they're saying, well, hang on, should we be exporting this most precious and finite resource for a quick buck, or should we keep it in our country? That's the decision of policymakers in that country, and they're voting with their feet. You're seeing taxation policy making it tougher and tougher. So these expected increases in production will also come from South Africa, from West Africa, but you've got a whole bunch of issues. You've got non-traditional financing there or absolute balance sheet financing required. You won't get Fortescues in West Africa because we needed to go to very traditional sources of market finance. So if China builds that 500 million tonnes, there will be a serious shortfall. And I just want to say also, in building this company, I'm sure doing what you would do anyway, engaging to change gears a bit with the local communities isn't a nice thing to do. It isn't because you're a good citizenship with your 3 conscience policies in play. It's an absolute economic imperative. If you do not get along with your local community, you're toast. Fortescue makes a serious effort. We look at things differently. In Cyclone George, we lost 2 people. A major tragedy for our company. We're still very young. Now we know other companies' policies, you switch on the public relations machines, you get it out of the newspapers as quickly as possible and you move on. But we didn't at Fortescue. We actually celebrated that these people died on the job working at Fortescue. We built the largest privately funded sculpture in Australia ever in their honour, and for the other people who have unfortunately lost their lives also in their duty in the Pilbara and at Fortescue. We celebrated them. We built a vocational training and employment centre where Aboriginal people who were long-term unemployed, we had people who would get them out of bed in the morning, drag them into the VTech, give them the raw numeracy and literacy which unfortunately our welfare-driven disparity in Australia has failed to give them. Issue them driver's licences, which is a first in Australia as a private company we can issue public driver's licences, and get them back on the road. And we have 350 people now who were in the main long-term unemployed. We have an Indigenous salary bill starting to push up towards $25–30 million a year, and more than that in housing. Approximately 15 times the minimum commitment we made when we reached our native title agreement with the local people. That's called serious integration with the community. Let's just have a look at that quickly. Sorry about that, team. Some of our graduates. I just want to show you the world's most advanced shiploader, just here. This lady, you can't see her well, an extraordinary but normal Aboriginal woman. She's operating Australia's most advanced shiploader, and she's part of a community of 38% Aboriginal people which run Australia's most advanced, most modern and most remotely controlled port. Nearly 40% of that entire high-tech population of our port is Indigenous. And while I can't say we'll maintain this, I can say to date, since we started at the port back in 2005, the turnover has been zero amongst Aboriginal people. You can't even get that at our mines, our railways, in non-Indigenous people. So it's been a fantastic result. So let me just conclude, if I could, where we're heading. We have this 2-port, 3-hub strategy. We announced, or I'm announcing right now, that our resources, due to another major discovery, we announced 1 billion tonnes the other day. We're announcing another 650 million tonnes this morning, have now pushed over 10 billion tonnes. That makes this strategy to go from where we are, 40 to 55 in transition now. We're commissioning our second mine as we speak. We're commissioning that second mine, building it even faster than we built the first mine, and we built the first mine in record time. It was a $1 billion investment, and I hate to admit to you that our second project is already superseding that one in terms of its technical advancements and its speed. It's taken us less than a year to build Christmas Creek, and it's about to switch on and push Fortescue up over 55 million tonnes a year on its way to 155 million tonnes. So growing very rapidly. We see the opportunity. I've spoken of us all and the privilege of just living through this wonderful time as an ability for us all to seize the day. Carpe diem, let's seize the day, let's grow instantly to 155 million tonnes. We've had our commentators at BHP and Rio Tinto tell us you can't do it for that much money. $8.4 billion for 100 million tonnes? Impossible. Maybe they forgot something, like maybe the port, we were told. Did they leave the port out of the equation? I mean, that's like leaving the car out of the equation when you try and drive your kids to school. It's just a nonsense. That includes the port, includes the rail, includes the mine. And it'll be done for $8.4 billion. We have this growing resource inventory. I love these big companies, and I don't know why they waste their time commenting on Fortescue, but one well-known executive in the iron ore industry referred to Fortescue's land holdings in the Pilbara. I mean, it is an embarrassing map if you look at the Pilbara. Here's the Pilbara, the world's most valuable iron ore province, and it's 65% owned by this startup company from 2003. How did that happen? I mean, the Pilbara has built some 70% to 80% of the market capitalisation of Rio Tinto. The Pilbara has built some 35 to 42% of the market capitalisation of BHP, depending on which analysts you listen to. How did this company get 65%? Why is Rio only in there at 12% and BHP at 8% and the rest National Park or juniors? Well, it happened because we took a view in those early days that we should seize the day then as well, that we should acquire every single tenement we possibly could and not base our faith on the accepted knowledge at the time, that if you didn't have access to a port, if you didn't have access to a railway line, you were worthless in the iron ore industry. And we resisted that. We swum aggressively against that tide, and we acquired every square inch of the Pilbara from all those people who believed tenements in the Pilbara were worthless without your own port and railway. And we set about building our own port and railway. Now, that particular well-known leader in the iron ore industry looked at that map and said, well, hang on. All these Fortescue land holdings, you wouldn't call them much more than real estate, as opposed to mining tenements. And I just want to say in reply this morning that real estate is producing new discoveries of iron ore at up to the rate of 2 billion tonnes a year. You know, in-ground value, 200 billion a year. It's not all bad. I'm happy with that real estate. I'm happy with that criticism. So we're stepping. We have a fixed plan to 155 million tonnes. We're on this track. We know how to get there. We're doing exactly what we said we'd do. And the scary part about this is we've just already done it. We've built the world's heaviest haul, most efficient railway system. Page 160, 2010, Guinness Book of Records, double page spread, the FMG railway line with an FMG train on it, the most efficient heavy haul railway systems in the world, FMG. The fastest port, the fastest ship loading in the port, the most rapid discovery of major iron ore resources, certainly in the Pilbara's history. The most rapid construction at Cloudbreak, 18 months, for a massive new mine, to now less than 12 months at Christmas Creek. We're about to do Solomon. It's going to push us out to 155 million tonnes. And today we're announcing that the total resource portfolio of Fortescue is pushed over 10 billion tonnes. That means that 355 million tonne strategy on your board is something which we can supply should the world need it. And of course, we looked for this. Back in 2003, we asked for land holding in the Port Hedland port, several times the size of BHP, and we were told we were drinking lunatic juice. Why would you plan for a 200 million tonne port when you didn't even have a mine, let alone a railway line? But we said, well, hold the phone. We believe we can do this. Take a chance on us. We will not let you down. The government took a chance on us, and we haven't let them down. And we're building out that port. The path to 155 million tonnes and then 355 million tonnes, we believe, is clear. We need a second port. We're planning it already at Anchortel Point, and it'll be a 350, 400 million tonne new port. And before anyone says, well, that's absolutely enormous, that's absolutely unrealistic, let's just wind back to 2003. I remember BHP telling the world the maximum capacity of the port of Port Hedland was around what their current production was, of course, 105 million tonnes per annum. That was where they were planning to grow to then. Now that port is planning to go out to 400 million tonnes, and it's clear the West Australian coastline, the first wave, the second wave, the third wave, and the other economies are going to need the Western Australia not to be bottleneck restricted by its ports. So we're growing that out. So I'd like to leave you with that economic commentary and bring it back, if you wouldn't mind, and forgive the selfishness here, ladies and gentlemen, to Fortescue. I think we are a growth story without parallel. Yes, we're a major company, but we're a major company growing to a super major in very short order. That new exploration model has yielded results without any precedent at all. Discoveries now going over 10 billion tonnes, and those drill rigs are out there drilling, and we consider the best is ahead of us. My little daughter said to me the other day, well, you've got enough, Dad, why don't you stop drilling? I tried to explain, well, you can't do that. You know, exploration's your lifeblood. Ask Robert Friedland. You know, you have to do it. As you get out of bed in the morning, you breathe air, you explore. You know, the best is in front of us. We've had to use new technology everywhere, in the railways, in our surface miners. And we're finding ore now at the rate of almost 2 billion tonnes a year. So perhaps in closing, right, let's just bring you back to those really big companies. You know, you've got the market caps, if you just divide out the iron ore divisions from Rio Tinto or from Vale or from BHP. You'll see them well over $100 billion in market cap contribution to their combined Australian and London listings. And now, of course, with Vale Hong Kong. The difference here with us, though, is that while in 2 years' time we'll be producing around what BHP is and around what Rio Tinto is for its share, it produces a lot more, but for other people. But for its share, which goes on to its profit and loss statement, we're going to be there in 2 years' time. Now, we're capitalised at 20 billion, not over 100 billion, and we've got a growth story to 355 million, and we control 65% of the Pilbara, and we announced way back in Mines and Money, Hong Kong, 23rd of March 2011, we reached 10 billion tonnes to feed this dragon. Then you know you have a very major company in the making. And with that, I'd like to say thank you very much for your time, and I'll stop flicking the slides backwards and ask, do you have any questions?